What's up everybody, I am Jaspreet Singh from theminoritymindset.com and Happy New Year! 2020 was one heck of a year and let's hope that 2021 is nothing like 2020. If you've been following our channel, you might know that I'm not a big fan of the new year, new me philosophy because why in the world would you want to wait for a new year to start before you change your life for the better? Just start doing that today. Don't wait for a new year to start. However, it is a new year and we just upgraded our Minority Mindset logo. We gave it a nice facelift and we're also upgrading our website, so stay tuned for that. A lot of strange things happened in 2020 which affect the way you want to use your money in 2021. That way you can use your money the right way. Interest rates got cut to zero. The United States government passed out unemployment checks like candy. You might have gotten a stimulus check and the United States national debt is skyrocketing. That's why in this video, I'm going to be going over 10 things you need to do with your money in 2021. And we're gonna start the new year off right by smashing the thumbs up button below. First, don't use 2021 as an opportunity to make up for 2020. There was a solid 2 or 3 months in 2020 where I didn't leave my house. Like I didn't go out to eat, I didn't hang out with friends, all I really did was make videos. Interestingly, during that time, my bank account started to grow because I wasn't spending any money. I like going out to eat and trying new restaurants and trying new foods with my friends. It's a hobby of mine. But I didn't really get to do that in 2020. What you don't want to do is go into 2021 thinking that, ooh, I got some extra cash in my bank because I wasn't spending any money in 2020, so let me make up for this lost time and this lost spending and spend even more money in 2021. Yeah, let me get 2 sides of extra guac. Everybody has high hopes that this pandemic is going to go away in 2021, and now that the vaccine is out, I think that we're finally at the tail end of this, which means restaurants will finally start opening back up, movie theaters will open back up, and we'll be able to hang out and do things like normal. Hopefully. I haven't eaten out at a restaurant with my friends since the beginning of 2020. What you don't want to do once things go back to normal is say, oh my God, we gotta make up for 2020 and go out to eat every single day to make up for what didn't happen in 2020. I wanted to do some traveling in 2020, but I didn't get to do that. If you were planning on going on a big trip in 2020, but you didn't get to do that because of the pandemic, do not use this as an opportunity to spend even more money just because now you can finally go on a vacation and you wanna make up for 2020. Be smart. Just because you got some extra cash in the bank doesn't mean you gotta spend it. Second, stop being scared of money in 2021 because scared money don't make money. The 2020 stock market was a prime example of this. In February and March, when the pandemic hit the United States, what did everybody do? They panicked and they got scared and they sold all of their stocks and the stock market tanked. Then the people that weren't so scared, they came in and they used this as an opportunity to buy while everybody was selling, and people were buying stocks for pennies on the dollar. In the second half of 2020, we saw the fastest stock market rally in history, and the people that made the most money were the people that were not scared. It was the people that went against the grain, that didn't listen to everybody else, and they were buying strong companies at huge discounts. Amazon went from trading under $1,900 a share to above $3,300 a share. Zoom went from trading at like $115 a share up to $350 a share. Peloton went from trading at like $25 a share to above $150 a share. And everybody's favorite Tesla went from trading at like $85 a share to above $650 a share. The easiest way not to be scared to lose your money is to just assume that when you invest your money is gone. Think about this. Next time you put money aside to invest, just assume that you have put this money in the garbage and that you are never going to see that money again. Then you take this money and you invest it wherever you want to put it. And if your money grows, well, now you just found a whole bunch of money. The reason most people are scared to invest their money is because they're scared of losing their money. What happens if you invest $1,000 and then this company goes bankrupt? Then what? Now, if you do your research and you invest in a company or a fund for the long term, chances are you're gonna make money. However, you're not gonna make any money if your money is just sitting on the sidelines scared the whole time. So if you wanna get over that bump, just tell yourself that when you invest this money, it's gone and you're never gonna see it again. Now you're not gonna have that anxiety of what happens if I lose my money because you've already told yourself this money is already gone, it's already lost. So now you can just let your money do its thing. Third, put some money aside for emergencies because if 2020 taught us anything, it's to be prepared. By now, I hope you've stocked up on toilet paper and paper towels and some beans and some canned food. That way you're prepared for anything, but you also want to make sure that your bank account is stacked up too, just in case. If there's one thing that you could have learned in 2020 is that you need to be prepared for for anything. If the economy gets shut down, or if you lose your job, or if you stop getting paid, you need to have some savings that you can fall back on. That way you have some money to eat. The simplest way to save money is just spend less money than you make. It sounds simple, but if it was so easy, we wouldn't have so many Americans living paycheck to paycheck who don't have $1,000 in their bank account. The majority of people in America follow this net zero mindset where they think, okay, I made $1,000, which means I gotta spend $1,000. I made $500, so I need to spend $500, and I got $300 in the bank, which means I gotta spend $300. So what I want you to do is next time you go to the mall and you have some money in the bank and you find this $100 sweater that you like, ask yourself, would you rather have a sweater or would you rather have $100? If you'd rather have $100, don't buy the sweater and keep the $100 in your pocket. If you'd rather have the sweater, then you can let go of your $100 and you'll have a sweater, but no $100. Start by saving $2,000 as fast as possible. If you do not have $2,000, you better not be ordering extra guac. Once you got $2,000, then your goal should be to save 3 to 6 months of your expenses. Once you got 3 to 6 months of your expenses saved in the bank, now you got a solid savings cushion and you have money to fall back on. And this is where you can decide, do you want to be a heavy saver or do you want to be a heavy investor? Now, obviously, investing has more risks, but it has more upside. Saving, this is just your money that kind of sits there as protection. If you're really not a fan of taking risks and you want to be protected against anything, then my advice would be for you to save 1 year's worth of expenses. So if you spend $3,000 a month, that means you should be saving like $36,000. After that, then you should be investing your money. If you have a year's worth of expenses saved, then you are protected. If you want to be more aggressive with your investments, you're okay with 3 to 6 months worth of savings because that should protect you for enough time. That way you can get back on your feet if an emergency happened. The thing that makes saving your money so interesting in 2021 is that interest rates are lower than ever, which is why you don't want to save all of your money. If you looked at your bank statements recently, you might have noticed that the interest rates that you're getting on your savings account, so the money that the bank is paying you for saving your money, is next to nothing because in 2020, interest rates were slashed again and again and again to near zero. Let me show you what that means. So if you put $100 into the bank today, after 1 year, your $100 might grow to $100.01. If you're lucky, some banks are paying even less than this. At the same time, the price of things are going up like this. What that means is your savings, your money are losing value because the price of everything around you, your rent, your groceries, your vacations, keep going up while the value of your savings are just sitting there flat. So your money is staying flat while the price of everything else keeps going up. So you're effectively becoming broker and broker by saving all of your money because interest rates are so low, which is why your bank account is paying you next to nothing. That's why you need to understand why you're saving your money. The point of saving your money is not to become wealthy or to become rich. The reason you're saving money is to protect you against an emergency. If you really want to become more financially free and rich, it is more important than ever for you to put your money to work and invest it and not be scared of your money because interest rates are so low, so your savings are not growing at all. This doesn't mean you shouldn't save any money in 2021 because you need savings to protect you against an emergency, but it is more important than ever to put your money to work because in 2021, we're gonna see near zero interest rates. So if you wanna see your money grow, it's not gonna happen in the bank. Fifth, make sure your family is protected. 2020 was filled with tragedy. A lot of people lost their lives unexpectedly. And that also means that a lot of families lost an income stream unexpectedly. This is never something fun or easy to talk about. I mean, you know that I love making jokes and laughing in our videos, but this is just something we have to talk about. You go to work every single day to take care of your family financially. But what happens if something tragic happens and you're not here anymore to take care of your family? If you have investments and you own assets that your family can live off of, then you're all set. If you don't, then you need to have a plan B that your family can fall back on, that your family can survive financially even if you're not here. This is what life insurance is all about. If something were to happen to you and you die, it would be hard enough for your family emotionally, but you don't want them to struggle financially, which is why if you have life insurance, then your insurance company would come in and they would give your family a big check, that way your family will be okay financially. Nobody likes paying for insurance, but it's a small cost you pay today to protect you against a big headache in the future, and it doesn't have to cost that much either. If you're a healthy 30-year-old guy, you can buy a $1 million term life insurance policy for like $30 a month. So if you were to tragically die during the term, your insurance company will come in and give your family a big $1 million check. I'm not gonna go too deep into life insurance in this video, but if you do want to learn more, our team put together an awesome guide going over everything you need to know about life insurance. So if you want to read this, you can read it on our website by clicking the link up here and in the description below. 6. Look at your taxes early in 2021 because millions of Americans are gonna see a big surprise on their tax bill. States across the United States saw the highest unemployment levels ever in 2020. That's when the federal government came out and they gave Americans $600 a week if you're unemployed. So if you lost your job and you filed for unemployment, you would get $600 a week from the federal government and you would get money from the state government. So lots of people were making like $1,000 a week in unemployment, but the thing that many Americans might not understand is that unemployment money you got is taxable. That means if you got unemployment money, you have to pay taxes on that money. If you got unemployment money from the government, generally the government is not going to withhold taxes on this money unless you tell them to do that. So if you got unemployment money in 2020 and you did not withhold your taxes, you're going to have to pay taxes in 2021 on the unemployment money you got in 2020. That's why you definitely want to do your taxes a little bit earlier in 2021. That way you can see if you owe extra money to the government. That way you can plan for it. And while I am on the topic of taxes, you should also understand that some of the tax cuts that Donald Trump passed will expire in 2021, which means some of your tax rates will go up. And because we've seen the national debt explode so much in 2020, chances are the government may need to raise taxes to help cover all this new national debt. 7. In 2021, use this as an opportunity to pay off some of that 2020 debt. Before the pandemic hit, we were breaking record high amounts of consumer debt. So we saw record amounts of student loan debt and credit card debt and auto loan debt. And then the pandemic hit and tens of millions of Americans lost their jobs. And now we saw this consumer debt skyrocket. People didn't have any money, but they needed to eat, so they turned to their credit cards to fund their dinners. So in the beginning of the pandemic, the record high amounts of debt broke even new highs. But that's when things got really interesting because we saw the country shut down and we saw unemployment checks start going out and we saw stimulus checks go out. And then people started using their money to pay down their debt. That's good news. Now, I want you to keep up the momentum in 2021 by paying down your debt even more. If you're getting a stimulus check in 2021, use it the right way. Use it to make yourself richer, not just Amazon richer. So, if you're getting a stimulus check, first use it to pay off any bills if you have any. Then use it to pay down any debt if you have unpaid debt. Then use it to build your savings cushion. And if you do these 3 things, then use that money to invest in your wealth. 8. Build a growth mindset because 2020 defeated a lot of people. Unless you were in the tech industry, chances are you were hurt financially by the 2020 pandemic. Either you lost an income or you lost a raise or you lost a bonus. When you work so hard for a financial promotion and then you don't get it or you lose your job because of something that wasn't in your control, that sucks. And now with all this money printing going on and these low interest rates, chances are we're going to see even more wealth inequality happen in 2021 and in the future. But look, 2021 is a new year. We're turning the chapter. We're getting out of this pandemic. And so now you really need to work on that mindset and work on growing the pie. When most people think about money, they have a very limiting mindset. They think, okay, here is my income. Let's say I'm making $40,000 a year. How much money can I save? Maybe you can save, let's say, a quarter of it. So you're saving 25% of your income. And now you might think, okay, how can I squeeze some more of my money into my savings? How much money can I squeeze? And so now you're pinching pennies and you're trying to save every last dollar possible. Now, this is good and it can help you build more wealth because you have more money going towards your savings. But what I want you to do is work on growing the pie. How can you go from $40,000 a year to, let's say, $400,000 a year? Because now if you're saving a quarter of this, yeah, you're still only saving 25% of your income, but 25% of $400,000 is way more than 25% of 40. So I want you to start working on this growth mindset of trying to grow the pie instead of just trying to think of how you can squeeze another penny. Look, at the end of the day, a penny saved is just a penny. There's an unlimited amount of money in the world. We really saw that in 2020. So what you want to do is build that growth mindset and understand how you can provide more value into the world. That way you can attract more money. Maybe that's by working harder at your job, getting a promotion, earning more money there, or putting your money to work. That way you can attract more money through your money and your investments. Use this year as an opportunity to think bigger. Now, once you start thinking bigger, cross that out and think even bigger than that. 9. If you own a home or you plan on owning a home, do a mortgage checkup. Like I mentioned earlier in this video, interest rates are lower than ever, which is not good for your savings account, but this is great news if you're getting a mortgage or if you have a mortgage, because now you can save a ton of money. When interest rates come down, so do mortgage rates. When mortgage rates are down, that means you can pay less money on your mortgage because the interest rate on your mortgage is less. And if you already own a home, you can save a ton of money because now you can refinance out of your current mortgage and get a new loan at a much lower interest rate. We are seeing the lowest mortgage rates that we have ever seen in history. So if you own a home or if you plan on buying a home in 2021, use this as an opportunity to save some money on your mortgage. If you want to learn more about this, I will link a video where I went over how to refinance your home and save the most money in the description below. And finally, number 10, use 2021 as an opportunity to invest more aggressively. I talk about investing multiple times a week on our YouTube channel, and that's definitely not going to change in 2021. Nobody can perfectly time the market. Nobody knows when we're at the top or when we're at the bottom. So what you want to do is keep consistently investing your money. That way you can take advantage of the market because you can't time the market. Make it a point in 2021 that anytime you get paid, a percentage of your paycheck is going to go directly towards your investments, whether it's the stock market or whatever. You're going to take some money and you are going to invest it every time you get paid. If you do that, your future self will thank you. Thank you for watching and Happy New Year again. If you enjoyed this video, here's a video that I think you'll love, and while you're at it, subscribe to our YouTube channel and join the free finance and business newsletter. And as always, keep hustling in 2021. See, you don't need life insurance because if you were to unexpectedly die, your family would just inherit your investments and they can live off of your investments. And if they needed to, they could sell your investments.